Hey guys, Credible Crypto here with a new YouTube video update. This is going to be a pretty comprehensive market update, of course, starting with Bitcoin, and then we'll jump into Ethereum, HBAR, CRV, XRP, and guys, before we jump into the content, a couple of quick announcements. First off, shout out to my partners at WooX. We did do a giveaway with them from the last YouTube video. Congrats to the winners who claimed their reward of $500 each. If you didn't win this, don't worry. I have a much bigger campaign coming up with my partners at both WooX and Bybit. That campaign should start shortly, so keep an eye out on my Twitter. And of course, it will be announced in my YouTube videos when it does begin. But we'll be giving out upwards of $10,000 and a number of other prizes from other sponsors as well. But yeah, quick shout out to WooX, guys. If you want to participate in the next giveaway and in future giveaways, the best way to do that is to sign up to both WooX and Bybit using the ref links in the video description. That way you have eligibility in the future giveaways. There are usually terms and conditions with each giveaway, but the first step is being signed up using my ref links. And without further ado, guys, let's jump into the chart. So we're going to start here today with Bitcoin. To take a quick look at the higher time frame idea here, guys, before we go into the lower time frames, we'll take a look at this tweet here that I shared, which shows a screenshot from my last YouTube video update, which was made probably about a month ago. And I basically talked about the higher time frame idea here. You can see in this tweet a screenshot below from my latest YouTube video that explains my primary bias at the moment. We do have a solid argument for a completed 5-wave move off of the 58K lows, but I believe this was just the first subwave of our final fifth, which means we should have 2 more major impulses to go with 1 more substantial correction in between before our cycle top. If you want more context, go ahead and watch the last YouTube video. So this is the chart that I shared, and this is basically the high time frame idea. Nothing has changed from this perspective. You'll notice I wrote time and price not to scale because I did not look at the time for this move. I did not scale this to time. So you can see that the 5th wave seemingly ends here in March, but the time is not to scale. This is mainly just to show structure, with the importance being that we should have 2 more major legs to the upside separated by 1 sideways correction. Now again, we've talked about the lower time frames. We don't know when this next leg to the upside will start, and we were looking at the lower time frames to try and help identify when that next leg to the upside starts. Also, the other important takeaway from this chart is that this subwave 2 that we have depicted here can technically go lower into the 70s or even 80Ks without it affecting this higher time frame structure. As long as we don't go below the origin of this impulse, which is down here at 58K, we can technically retrace deeper into this region without it harming the higher time frame structure. So people that are freaking out if we do get a move into the 80Ks, you should not be. That's totally healthy and fine. Even the 70Ks is fair game, although I don't think that we'll necessarily get that. Now, that being said, the other key takeaway here is that the moves to the upside as we go up here should get even more aggressive than the move from 58K to 90K, because this is essentially the parabolic blow off top, the final 5th wave of the 5th wave of the cycle that started back when Bitcoin was at 3K in 2018. So this is 7 years in the making, and this move should be the most aggressive move we've seen in the cycle, which means it should be the most violent move to the upside that we've seen in the last 7 years. So keep this higher time frame outlook in mind. Of course, we have our minimum target here of 150K. We should break that, I think, in the next wave up, see some consolidation, and then go for a final 5th wave. I'm not sure how high that's going to go, but it should be somewhere under $300,000. We'll know more actually depending on when this 3rd wave ends, so we'll wait for that to develop. But this is the higher time frame outlook, guys. Now let's go ahead and dive into the lower time frames. So following this tweet on the higher time frame, I shared a lower time frame outlook, key levels to be watching. And you can see here that I said for those who are taking my chart below too literally and ignoring the time and price not to scale part, the purpose of the high time frame chart was to show structure. I'm not saying that we must go lower here. In fact, our low may already be in for Bitcoin. Let's take a look. And basically, I shared 2 key levels here in the lower timeframes that I'm watching, support zone 1 and support zone 2. It's possible that the low here at around 86K was our low for Bitcoin and that we may not go below that. And I mentioned that as long as these 2 support zones are held, either one of them could mark our potential bottom. It's possible that either of these will act as support for a bottom before continuation to 150K plus. That's what this tweet was about, because we had a lot of people freaking out about Bitcoin at the highs here, talking about a cycle top or talking about the end of the cycle already being in. And so I said, really, there's nothing to be panicking about. We have 2 key areas of support on the downside. And if we lose those, then we push into the lower 80K region, which is still technically okay. But before we can even talk about 70 or 80Ks, we have to lose both of these support zones. And so that's what this tweet was about. If these levels are lost, then we can entertain a potential push into mid 80Ks or even 70Ks, both of which are technically allowed without breaking high time frame structure, as the origin of this 5-wave move up began at 58K. And so that is the last significant higher low that should be defended. So essentially I said we don't need to worry about 70Ks or anything like that unless these 2 support zones are lost. Since then, guys, we have seen a lot of chop. We've seen a lot of chop yet these support zones have held. We first bounced off of our support zone 1, kind of moved up a little bit, and then ultimately what we have today is a breakdown from that support zone 1. We broke down after bouncing off of it initially, and now we've tested our support zone 2. So going back to the chart shared here, broke down support zone 1, are now testing support zone 2. And yet support zone 2 continues to hold, right? So we saw a pretty decent bloodbath on alts over the last few days. And all Bitcoin did was tagged our second support zone, which has held so far. And so again, there's nothing to be panicking about or to be concerned about. Bitcoin is simply moving sideways. It's holding our 2 key support zones. I'm going to remove this one now because it's no longer valid now that it's been broken, but it's holding our second support zone. And if and only if this support zone is lost, can we entertain a move down to sub 85K or even a little bit lower than that. So with that being said, let's talk about lower time frame price action here as we sit on top of our support zone 2. And I'm going to show you guys what I think makes the most sense, key levels to look at here on the lower time frames, and what I think makes the most sense if our bottom is already in here or if it may not be in as well. So first off, guys, the way that I'll look at a chart like this is I'll try and mark off key areas on both the low time frame and the high time frame. So we did have this bleed down over the last couple of days. Bitcoin didn't take much of a hit. It just tagged our second support zone, but a lot of alts got hammered. And so a lot of alts are at key levels here, and the way that they move in the coming days is going to be impacted by the way Bitcoin moves. So I'm going to show you guys both the bullish and the bearish scenarios here, and we'll talk about how that may affect alts as well. But for now, guys, key levels that I'm watching here on the lower time frames, a lot of people calling for a V reversal or like an immediate reversal because of this big wick. And the big wick is nice to see, but at the end of the day, a lot of alt structures, including Bitcoin, look pretty similar here, in that most of them have not yet made a recovery above the point of breakdown, we like to call it, or the level at which we broke down from. So for Bitcoin, it's not super clear here. Sometimes it's more clear than other times, but you can go on different time frames to try and identify the point at which the acceleration of the downside started. And you can see here that we do have this cluster of 12-hour candles, and then we got this big candle and then an acceleration. So the point of breakdown, you can say, is somewhere within this region here. The way that I'll look at it is I'll see that there is a gap here, like an initial acceleration, a little bit of a consolidation, and then the full-fledged breakdown. So I'll mark off the last local high before the aggressive breakdown, and then we can see that we have a gap here, and then you can take the area that preceded this entire breakdown or this cluster of consolidation, what we like to call supply or like a key area resistance. So in my eyes, the way that I interpret this is we saw a nice bounce off of support, which is logical, but until we break and clear the area that we broke down from, this is technically just a dead cat bounce or a lower high, okay? Now, this is an interesting position that we're in because we have support right below us, we have resistance right above us, and so, again, we're still trapped in this larger range, and that means more chop for now. Ultimately, we're going to choose a direction here, which means either breaking down from this support and breaking to the range lows, or breaking out of this resistance and breaking to the range highs. We don't yet know which we're going to get. But I will share with you what I think is most likely and what I think makes the most sense, on the lower time frames at least, and we'll take it from there. So I like to view this as a lower time frame range within the higher time frame range. And we're looking at this local swing high that was the last peak of our last pump to the upside. And we're looking at this local swing low that preceded that move to the upside. And so what I'm looking for on the lower time frames in terms of price action is I'm looking for price to either tag these highs and reject at resistance, or push into this area and find support once again and move back to the upside. And so what I think makes the most sense is I do think that initially you basically want to play, again, for lower time frame traders, you want to play the extremes of this range and you want to avoid taking position in the middle. For those that are not active traders, this information is more for educational purposes because you're not going to be trading this, but it's good to kind of understand where the areas of interest are in the mind of a trader. And so what I'm looking for here is potential rejection here to come back into this lower time frame range. Ideally, we can get a sweep at some point of this local low. And at that point, two things can potentially happen here. In the most bullish case, right, we get a rejection at the highs, or maybe we don't even get to the highs, but we come down into these lows, take these lows, bounce, find support, and then we essentially break up and out of this consolidation structure. And I actually have a sketch that I made earlier that looks a little bit cleaner. We'll go ahead and show you guys that one here. Okay, so this is like my dream scenario, the ideal scenario, okay? And that is that we form this little range here in the lower time frames. It would be nice if we could take the highs into resistance, see a rejection, come down to take these lows, essentially put in a higher low here, and basically see some level of absorption into this area of support on the higher time frames that we marked off a while back. And then some consolidation, tightening here, and then an eruption to the upside to go for the highs, okay? And then at that point, if we do break out of the supply, we're hoping we get that in an impulsive move, meaning a 1, 2, 3, 4, 5, a trending move to the upside with a series of higher lows and higher highs. And if we do get an impulsive move, an impulsive breakout, then it's possible that we then flip this to support and we are on our way for that next major leg to the upside, okay? The alternate scenario, of course, is that we form something like this. We get a leg to the upside, but maybe it's not impulsive. Maybe we get a little fake out here and then break down. That's possible. Or this area, this support zone 2 that we have, doesn't hold. Okay, so again, we're up against resistance here and support here. One of these is going to give way. This is the bullish scenario in which support holds and resistance gives way. But of course, there's no guarantees in this space, and there's a chance that we break down. Now, if we break down from here, let's say we find resistance here, we reject, we find support here, we bounce a little bit, we bounce here, and then instead of breaking out, let's say we break down, okay? That's the alternate or the more bearish scenario, in which case support zone 2 is lost. In that case, I would expect a quick flush into what is basically a big gap here, a liquidity void, an inefficiency. You can call it whatever you want. Basically, you can look at this zone here the same way we had this little gap here. You can look at this entire region as inefficiency, a gap, whatever you want to call it. There's no right or wrong answer. There's a bunch of different things that people call it, but you can consider this like a big void because of how quickly price moved through this region. Oftentimes we revisit depending on how bullish or bearish we are. So maybe a dip into this region, into the mid 80Ks. Again, technically lower is fine. I don't think we're going to get it, but maybe a dip into the mid 80Ks and then a potential reversal. But for now, guys, remember this scenario doesn't come into play as long as support holds. And right now support is holding. And we'll talk about what I'm seeing on some altcoins as well, because we're going to assume for now, just for simplicity's sake, that this support is going to hold, okay? And so I'm going to assume that we ultimately push up out of this cluster consolidation. And what I want to see for more confidence there is I want to see a nice little base formed here, what we call a triple tap, initial low put in, a lower low to take liquidity, and then a higher low, some sort of a consolidation here would be nice. Ideally, we get an impulsive break to the upside. But again, with Bitcoin looking as bullshit as this would not surprise me, because again, when Bitcoin is this bullish, especially in the conditions that we've seen alts in, sideways corrections with just repeated acceleration of the upside without getting much chance for deeper dips is ideal. We'll also take a look at velo data real quick, and we can see here that open interest is bleeding, which is a fantastic sign. And you can see that through this entire consolidation that we've seen, open interest continues to decline, which is a good thing because the less leverage that is in the system here, the less chance there is for a big liquidity flush lower, right? So this is looking really healthy in terms of our data here. The cluster consolidation is holding up. We're not really getting much in terms of depth of correction here. Open interest is falling, which means leverage players are closing positions. And despite the spot sell-off here, price is holding steady. That means we're seeing absorption and accumulation here at the highs, and market sellers are being absorbed by passive limit buyers who are absorbing all the sells here from active market participants. And again, this is another good sign that we're seeing funding flat. We're seeing a spot premium. Everything looks really, really, really healthy here for Bitcoin. So even if we were to get a breakdown of support zone 2, in my opinion, it would be a quick leverage liquidation flush before we continue higher. And again, as it stands, that leverage that may be targeted here is declining. So there's less and less of an incentive to try and push price down, because if open interest continues to decline, there's not going to be much to flush out by moving price lower. So in that case, we would just hold support zone 2 and break out to the upside. So this is kind of like my primary scenario for Bitcoin. Of course, the alternate is that we get a quick move below support zone 2, push into the mid 80Ks. But for now, when we look at our altcoins, guys, we're going to keep in mind these two possible scenarios on Bitcoin, because frankly, if Bitcoin does break down, we're going to likely see an effect on alts, okay? So this is Bitcoin. Really, really healthy, all things considered. We're still holding support zone 2. And as long as we do that, there's a chance that our bottom is already in or close to in, and we could see some expansion here relatively soon, okay? With that being said, let's now move on to our altcoins. All right, guys, and so the first altcoin we're going to talk about is Ethereum. We'll go off of the recent tweets that I shared on it. Basically, I did have an Ethereum long off of this level, playing this triple tap. Was stopped out of that long when we went down and took this low here at around 2860. And then at that point, I said I will now wait for a test of monthly demand at 2400, 2800, and look for PA to develop off of that level to look for a new entry, right? So following that, we then shortly after went ahead and tested that monthly demand between 2400 and 2800. This is where I was interested in opening another long or attempting another long. But as I shared here, we reached that level, but I did not open a long because we had a massive rise in open interest off of 2400 earlier. And despite the bleed down into what was monthly demand, none of this open interest actually closed. And again, open interest is a measure of the number of open contracts on leverage, right? So the idea is that when it's high, there's a risk of liquidations in both directions, because open interest doesn't tell us whether there's primarily longs that are offsides or shorts that are offsides. For every open contract, there's a long and a short. And so really, this just tells us that there's a large number of both longs and shorts open. Now, some of these longs and shorts are going to be hedges, which means that they will not get flushed out on aggressive price movements. But some of them are going to be traders that are directionally positioned, either long or short. And those are the ones that will get squeezed in either direction, both on the upside and the downside. So when this level is higher, it means there's a higher likelihood of a short or a long squeeze, which means there is likely going to be more volatility. So because of that, we went ahead and held off on the blind bids, right? And I said if OI was lower, I'd probably consider blind bidding here with a stop loss below monthly demand, but we're going to hold off. And at the same time, Bitcoin was floating above our second support zone, the one that we tested shortly after. And I said it hasn't been tested yet, which makes me think we aren't quite done with this correction yet. For these reasons, I'm going to simply watch and see how PA develops for now, rather than blindly longing this region. Shortly after that tweet, of course, we saw Ethereum rip through that region. So if I had taken it long, I would have gotten stopped out here. So it's a good thing that I did not. We read the situation correctly. We then got this ugly wick all the way down to 2170. Didn't quite take this low, which is ideally what I would have liked to have seen. And then we saw a decent bounce to the upside. Now, once again, just as before, people are calling a bottom, saying that we had a massive reversal, saying there's no way that we revisit those levels. But again, what have I said about these things? This is our point of breakdown, which looks quite clear from the higher time frames, quite clear and quite obvious. This is the daily time frame right here, or you can even go to the 3-day chart. You can see that we had this consolidation. We had a big breakdown from this level. And while we did see a nice reaction after taking some liquidity down here, we have not reclaimed that level from which we broke down. So until we reclaim that level, we can't really call this a reversal. For all intents and purposes, this is a nice automatic reaction after taking a bunch of liquidity and likely seeing some buyers step in, likely seeing some short covering after take profit targets were hit. But for there to be real strength here, we really need to get back above the level at which we broke down, because until then, this is technically just a lower high, which means we don't have a shift in market structure. So when we see automatic bounces like this that go up to the level that we broke down from, that's kind of the bare minimum that you want to see. I wouldn't consider this tons of strength. Strength would be us actually hitting this level and then kind of going sideways and pushing through. That is actual strength. This is an automatic reaction, which probably has to do with people taking profits on shorts again, getting squeezed as price bounced off of this level. But it's just kind of an automatic reaction to any sort of aggressive volatility that we see. Until we get back above this level, we can't rule out further downside. And that being said, with the equal lows that we now have, I think it's fairly reasonable to think that we may come back down to take these lows and fill in this wick before we get the true reversal. And so again, just like I shared with you guys on Bitcoin, on the lower time frames, Bitcoin is in the same situation. We haven't yet recovered that place that we broke down from. And I've showed you guys how we could come up to it, we could come back down and see a little bit of a basing out structure here before impulsing, or we could even break down below the green zone temporarily before reversing. If we were to break down below the green zone, you can bet that Ethereum will see new local lows. But even in a scenario like this, where we just pop up and kind of chop around here, we could see Ethereum revisit its own lows, because Bitcoin to get pretty close to visiting its lows here at 91K from that drop. It would not be unreasonable to assume that Ethereum, again, with alts showing a lot of weakness over the last few days relative to Bitcoin, it would not be too crazy to assume that Ethereum could also revisit this wick down here. And again, that would be ideal, because we would clean up this kind of equal lows that we have here into what is an even more significant area of, once again, demand or support. And you can take essentially this entire cluster, or you can even go like this cluster here as a major area of support. And you can go to the higher time frame charts and you can see where this comes from. This is a 2-month chart, guys. So once again, you can look at this and you can kind of take these last 8 months of consolidation and you can view that as a high time frame area of support, the same way that we viewed this monthly area as a high time frame area of support, which it has acted as so far. But yeah, a wick into this cluster here, just below these equal lows that we've mapped out. In fact, there's another low here on this 2-monthly chart. So a wick below to clean up all these lows into an even more significant area of support would not be unreasonable, right? And so again, going back to the lower time frames, that would just look like us revisiting this wick. Again, it would look something like this, rejecting at local point of supply, revisiting this area here, forming a nice base, and then impulsing to the upside, okay? So in the grand scheme of things, it doesn't amount to much in terms of downside, but it does mean that we may sweep these lows. So typically on a move like this, you get a lot of people that then FOMO into the coins that bounce, thinking that that must have been the bottom. They FOMO in, they buy, when we haven't yet actually reclaimed even the most basic level of resistance, and then they place their stop losses at the low because the low must be in, And then what happens is we come up, we reject, and we take their stop losses, and then we get the reversal. So that is kind of what I see as very reasonable to happen here. A lot of people saying there's no way we revisit those lows. I'm getting the comments all the time on my Twitter, like, oh, you're sidelined, you missed the bottom, there's no way we're going back. It's like, we haven't even broken the first area of resistance, right, which is our point of breakdown. Another thing, when you're a trader, guys, there's no such thing as being sidelined, right? So obviously I've been holding spot for a long time now, and I've said many times I keep my spot and trading portfolio separate. Spot does not get touched till end of cycle, and I've been saying that since Bitcoin was at 3K. So even if I miss a trade setup here, there's no way in the world that I should be silent. And then that's kind of the goal with keeping spot and trading portfolios separate. When you keep them separate and you don't touch your spot portfolio, you just DC in the bear market, there's no way to lose in a bull market, because even if your trading portfolio doesn't go well, or maybe you're making mistakes in your trading portfolio, or you're getting stopped out too much, if you're in a bull market, price is going to rise and your spot portfolio will keep you afloat. So that's the idea between keeping the portfolio separate, so that in situations like this, I will never be sidelined. But if we get a dip into this region, I have an opportunity then to take another long trade or long setup, and that could make me even more money on the way up, aside from my spot portfolio. So with that being said, guys, if we don't dip to these levels, then it's simple. We look for the next trade, which would be on a reclaim likely of the point of breakdown. But as long as we're underneath the point of breakdown, the opportunity remains, or the potential remains, for an opportunity at a long just below these lows. And that's where I'm interested in taking a potential trade setup on Ethereum. So again, like I said, some of this PA will be dependent on Bitcoin, right? If Bitcoin breaks down from our second support zone, then you can almost guarantee we're going to see, sub 2K. If Bitcoin doesn't break down from the second support zone, then it may take a little bit of weakness on Ethereum against Bitcoin to have us revisit these lows, right? If Bitcoin's low is already in and we're not going to break down from our current support zone, then we would be relying on a little bit of Ethereum weakness to get back to these levels, which I think is not unreasonable to expect, considering Ethereum has been weaker than Bitcoin for the last 2 years. If this was a monthly demand zone, then the demand zone that we have below that, like a massive, massive demand zone, right? So these are just different areas, different levels of interest. Some are higher time frames, some are lower time frame. As always, higher time frame levels carry more weight. And there's another way that you can view this as well. Like, you just look at these candle closes on this 4 monthly time frame, or you can call it the quarterly. You can just put a line here, and I can tell you that this level here, specifically at 1864.79, is a very significant high time frame level. Why? Because we had a quarterly candle that broke above it. We then tested it as support here. It held. Then we broke below it. It then acted as resistance for essentially 8 months. Finally, we broke through, and now it hasn't yet been back tested on the higher time frame. So actually, a tap or a wick into 1864, into this level here, would be an incredible level to bid. I would bid it blindly, and I would put a stop loss below 1535, for example, targeting new all-time highs, which looks something like this, right? I mean, this is like a simple blind bid if we get it. Now, either you're going to get filled on this or not, but if you get filled on it, that's an 8.7R trade, and it's a very simple, easy level to bid just by looking at the higher time frames, right? Now, there's no guarantees we get it, but if we get it, what a fantastic trade opportunity. So that's Ethereum, guys. We'll now jump into some of the other coins. Let's go ahead and take a look at CRV next. All right, guys, so this is CRV, and CRV is one that I've been covering for some time now. One of my biggest holdings, of course, spot holdings. And I've also been actively trading it for the last 2 or 3 months, if not longer. So let's take a look at CRV, guys. On this drop, we had a lot of people freaking out about the drop on CRV, right? Once again, the bear market, PTSD, I like to say, came out again, and people going crazy and losing their minds about the retracement that we've seen here. And I shared this chart saying that 48 to 58 cents was likely in play at this point. This was when you were trading at 58 cents, right? But I said, even if we go below that, we have a number of higher time frame support zones around the region too. We have this monthly bullish breaker at 40 to 50 cents, and then we have range lows and monthly demand below that at 20 to 30 cents. So we could go even lower than 48 to 58 cents, but it really wouldn't be a cause for concern, right? We're going to dive into this a lot because there's a lot of confusion around this. We have 26 days until the next monthly close. My bet is this monthly candle will just end up being a large wick into one or more of these high time frame zones before closing back above flip monthly supply at 58 cents. If I wasn't already fully loaded on spot, I would be laddering spot bids down to these high time frame zones. Time to go fishing. So my last up that we had flipped this monthly supply, which is a bullish sign, and we have not yet seen a monthly close below it. Now, monthly candle is obviously a high time frame level, which means that a lot can happen intra-month, right? Within the month, we can see a lot of volatility. We still have 26 days left for this monthly candle to close. And so basically what I'm trying to say is I can see us pushing down into the orange zone or even the blue zone. But by the end of the month, meaning in 27 days, around 4 weeks from now, I would not be surprised if we see a large wick and we end up closing back above the monthly bullish breaker or possibly even within the green zone here. Basically a full retracement of whatever this drop ends up being. And I've had some people that said calling a move 2.2 from 1.3 not concerning, it is a little bit funny, right? So basically the last few months of price action just wiped out. So basically where we started for 2 to 3 months ago, facepalm. Why is CRV looking like the weakest out of all the alts, down almost 20%, while most other alts are down 10 to 15%? And basically like a lot of people losing their minds at this retracement. Now, what I want to point out is that we actually covered this scenario in I think 2 YouTube videos ago. So this should not surprise anyone. And what I made clear in that video was that this is a distinct possibility, but it is not a cause for concern. So let's quickly watch like a 30-second clip. We're going to refresh our minds on the idea behind this deep of a correction and why it really doesn't change anything, why it really isn't a cause for concern. And then I'm going to jump into a little bit more detail once we watch that clip. So go ahead and take a look. It's all about how aggressive or conservative you want to be in this scenario, right? But anyways, this is CRV. I previously pointed out 36 cents as an area of interest. And with the amount of that we've moved up here, technically, I feel like that's probably not going to happen, but you can't rule it out. And again, even if we do come down to 36 cents off of the move from 18 cents, I know that's a deep retracement, but technically it's still perfectly valid. And at that point, what we're probably just doing is retesting the cluster of consolidation that we deviated below for a triple tap, as we like to call it, which is just another retest of the range lows before acceleration. I don't think that's necessarily going to happen, okay? But I'm just saying that you really can't rule it out, and that's what makes trying to position at these higher levels a little bit tricky. All right, guys, so that was the video clip from the video that I made a couple of months ago, and you'll notice that in that video, we were trading at about 121, right? So it's actually kind of like the local top here. And in that video, I said we could certainly see back to 36 cents. I said I didn't think that it was likely, but we really can't rule it out. And that even if we did get a move all the way back down to the range lows, it would essentially just be a retest of this large macro range before acceleration to the upside, okay? And so what I want to kind of emphasize here is people have been freaking out about this drop. You need to understand that in the context of market structure, if we get an impulsive move to the upside, and again, this is a little bit more nuanced that I'm diving into here, but if we get an impulsive move to the upside, we can technically retrace 99% of that impulsive move without breaking structure. If this was the low that we're concerned with, then anything above this low here at 22 cents is technically a higher low. Now, in more depth there, we also consider this area that preceded the last aggressive move, we consider that an area of demand or an area of support. And so oftentimes those areas are retested, and when we retest them, we see buyers stepping in. You can see here that this area is a monthly demand zone. You can even take it as like a quarterly demand zone, because we do have 4 months of consolidation here before one giant monthly candle that took us from 22 cents up to 75 cents. So this is a very significant area of support. The best chance to buy if we get it. No guarantees that we will. And above that, we have another area which we call a bullish breaker. Essentially, the point of breakdown that preceded the last major flush. Once that point of breakdown is reclaimed, as we can see here, then we consider it what we call a breaker, which just means another area of support, of significant support. So there's tons of support between where we are now and any need to be concerned, essentially. You can actually even see here, if I go ahead and I hide these low time frame drawings, you can see exactly where price is trading right now, right? We wicked deep into the monthly bullish breaker, and now we've traded right back to the high of it. The interactions with price at these key levels is so clean, and this is often the case. It's so clean. You can just see how clean this is, and it gives us even more confidence that these things work, right? In any case, guys, the point is that on the higher time frames, there is no cause for concern here. We specifically outlined this scenario 2 months ago because we could not rule it out, right? We can't rule it out. And I will go into a little bit more depth here about the structure, because we've had people asking me, is this impulsive structure on CRV? And I talked about this, again, I think in that same YouTube video from 2 videos ago, about why this move to the upside is not impulsive. We talked about comparing it to something like XRP that had very clear impulsive price action. And then we said that CRV is not impulsive despite this giant rise. And that means that when you're talking about a move that's not impulsive, that means that the subsequent correction is allowed to go even deeper, right? Typically, when you have an impulsive move, we should not go back below the origin of that impulse. An impulsive move usually suggests strong momentum. Now, I've previously discussed this. I don't know if I've actually talked about this on YouTube, but maybe in private conversations with friends, but I view the entire CRV chart essentially as a giant range since inception, with the range lows at 32 cents and the range highs at $7. And so in my opinion, the entire structure on CRV since its inception has basically been one giant accumulation range. And this has been a deviation below that range. We've now reclaimed the range, and it seems like we may be going in for a potential retest of the lows. Again, we may not get that. We may retest the lows. In markets, you have 2 types of price action. You have trending price action and you have corrective price action. Or you have trending price action and you have ranging price action. So the idea is that if this is a giant range that we're in, The impulsive price action, which is considered the trending price action, may not have even started, okay? And the implications of that are that the current move up from 22 cents to $1.33, while very aggressive, that may not have even been an impulsive move, okay? Which means, and I've seen this happen so many times, so I can only say this from experience, and if you're not experienced, it's hard for me to kind of explain this to you guys. Oftentimes when we have these sort of ranging structures and we get what we like to call a triple tap, price is falling, it's correcting, it puts in a key swing low, and then it bounces, puts in a lower low, bounces again, puts in a higher low, and then you see a new trend begin, right? So in price action that looks like this, where we call, again, it's like a base forming or a triple tap, before the trend begins, you get this consolidation or a base to form, and then you get the trend that begins after, okay? And so what that means is that any price action that you see within this base or accumulation range, or you can even view this as like a Wyckoff accumulation for those who study Wyckoff. And again, these are all different names and different methods for generally the same thing that's happening here, but you have different schools of thought around it. But what you have is an accumulation base form before expansion or before the next trending move begins. The actual trending move is this leg up that breaks us out of the structure. Everything prior to that, even though the moves are big within the range, this is all considered corrective price action or ranging price action. And so in that context, it's very possible that the actual impulsive PA hasn't even been witnessed yet, hasn't even started yet. And what that means is that despite this move up off 22 cents to 130 being aggressive, despite the moves over here from 40 cents up to $2 being aggressive, these are all aggressive moves, the actual real momentum-based trending impulsive price action that we look for may not have even begun yet. Because again, that tends to begin after you get the triple tap, after you get the third tap of the range lows, then you see the impulsive price action begin. And I can tell you, I've seen this so many times. I'm too lazy right now to pull up examples because I'd have to go back and look for the examples in prior price action. So you can either take my word for it or think that I'm just BSing, but I've seen so many instances where we get this triple tap formation and the impulse starts off of the third leg, right? Off of this third tap. That's when we really get the impulsive price action. And if that's the case, then while this move up was nice, it's not even a taste of what we're going to see after this structure actually completes, because it may be incomplete right now. Now, again, there's no guarantee that we get this triple tap, but it's a fantastic buying opportunity if we do. And the other scenario, another structure that we sometimes see is called a PO3, which is just, again, another way to describe ranging price action. And in a PO3 structure, what we have is we basically have a range once again, and then instead of getting a triple tap, we just have a deviation of the range, and then price moves up to the highs of the range. And that is what we consider a PO3, power of 3, meaning accumulation, manipulation, and then expansion. And in PO3 structures, the impulse then will start off of mid-air usually, right? So after the structure completes, you have a completed base forming, and then you could get corrective price action up to the highs. Then you could get a period of consolidation, and then you could get the impulsive structure that is a really strong trending move, right? So my point is, I understand that this was a deep retracement, but there's no cause for concern right now. This is just another fantastic buying opportunity for those that are patient. And again, at the end of the day, whether we go down and bounce off of 50 cents or whether we go down and bounce off of 33 cents, this is, at the end of the day, technically a higher low off the lows at 18 cents, which I do believe was our macro lows because we have a nice clean range, a nice deviation below, and now we've reclaimed it. So it doesn't matter what happens here. It is noise before the big move up, in my opinion, and you do not want to get caught freaking out about lower time frame price action and miss the higher time frame picture, which means as bullish as ever. Right now, I got a lot of heat and a lot of flack, people telling me that I was crazy for suggesting it makes sense to buy a chart that looks like this, that it makes sense to buy CRV when it was down at 20 to 30 cents. We publicly longed CRV on a leverage long off of 24 cents, and within a few weeks, that position was up 5x. We outperformed most of the market with that, right? Utility coins were doing 4 to 5x off the bottom like nothing. And so I've always said that the biggest and best opportunities come from charts that look ugly. You're not going to get massive ROI of a chart that is already pumped, in this case, 20x off the lows. And this applies to any chart, right? Someone who gets in at 24 cents, by the time we get to prior highs, they are already up 25x. Or if let's say we go from prior all-time highs, we double that. So if we're at 676 and we go to around 14 bucks, the guys who got in at 25 cents are now up 50x. The guys who got in at the highs are now up 2x. So the difference between a 2x and a 50x is buying a chart that looks ugly but that has fundamentals that support its future outperformance versus focusing on the ones that have already put in 10, 20x and buying those, right? So I've talked about this plenty of times. I'm going off on a little tangent, But the point is, I got a lot of heat and a lot of flack for buying CRV or advocating for CRV down here in the 20-cent region. It then did a 5X. And once again, people are losing their minds because we're seeing a dip that really they should be very bullish and excited about. I want to jump into really quickly the lower time frames here to talk about lower time frame price action of CRV. Will we get monthly demand? Will we bounce off of the monthly bullish breaker? Let's go ahead and take a look at the lower time frames. Once again, we're using the same approach that we used on Ethereum, the same approach that we used on Bitcoin, and that is that until we get above the point of supply, or the point that we broke down from on this drop, we cannot rule out another low being made. So for CRV, the same thing applies. We're looking for potential rejection into this zone and then a potential wick below here, at which point two things can happen, right? One, ideally, we wick below into blue, we recover, put in a higher low, and then the impulse begins. This would give us a nice opportunity at new longs or allow us to compound long positions. And again, we're hoping that we get a wick into the blue zone here. So this to me makes the most sense. But again, keep in mind, this is partially going to be susceptible to what Bitcoin price action does as well, right? So this is the best case scenario and I really like it, and I'm hoping that this plays out. We can get some really nice trade setups if this does play out this way, and it would be a perfect triple tap or perfect retest of our range lows before the actual real aggressive expansion of the upside begins. And this aggressive expansion of the upside should be much stronger than what we saw on the last rally from 22 cents to $1.40. So this is ideally what we get. Of course, we can't guarantee that, but this would be perfect if we do get it, okay? So this is what I'm looking for on CRV here on the lower time frames. I'm hoping that we can get a wick into here. Ideally, we get this playing out by the end of the month. So by the time the March monthly candle closes, hopefully we will have moved back up by then, and we'll close somewhere above 51 cents, 52 cents, or ideally somewhere in the green zone above 58 cents, okay? And what that would end up being then is that would end up looking like a giant wick on this monthly candle, but ultimately not breaking anything down, holding the monthly bullish breaker, ideally wicking into monthly demand, and then holding the monthly bullish breaker and closing above, which would set us up for continuation back to the upside. So again, that's ideally what I want to see happen. And again, ideally, this lower time frame structure all plays out within the next 26 days, okay, within the next few weeks. So that is CRV, guys. Let's go ahead and move on to the next coin, which is going to be XRP. I shared a tweet not too long ago talking about how we did sweep key levels on the downside, both on the USD pairing and on the Bitcoin pairing on this most recent drop that occurred a few days ago. Overall, this is very healthy that we've now taken both these lows. And I mentioned that this does look like a running flat structure. For those familiar with Elliott wave, it means a move in which we take the highs and then take the lows. If you're not an Elliott wave person, then you can simply view this as a range from which we deviated above the highs and have now taken the lows. Again, different words for the same stuff going on here. Yeah, so we had this move here with a clean sweep on both these levels. Once again, guys, we go back to lower time frames and we try and identify if this move is done yet or if we could see another lower low. So then I went ahead and shared this lower time frame chart talking about, once again, the same exact thing, that same exact approach that we've had with the other coins that I've talked about in this video. We have the point of breakdown or the area of local supply. Until we get back above this, we cannot rule out another move back down to the lows. And so I shared this chart saying, no guarantees we'll get it, of course, but I'll be interested in a long on XRP on a sweep of our local lows into this next cluster of demand. More on this in my next YouTube video, which is the one that we're now talking about. But yeah, this is basically the way that I was viewing XRP. And if we were to get a move down into the green zone, it'd be very healthy, just a sweep of these lows. Once again, looking for a triple tap, a low to form, then a higher low, and then continuation and a breakout. Of course, if we get back above local supply, that's obviously very bullish, and that means that we may not get this opportunity. But this is nothing to be bearish or concerned about. Again, this is very healthy. It just means that the most aggressive move of the correction is over, and now we're just basing out or kind of like wrapping up this accumulation before the next major leg to the upside starts. I also wanted to talk about lower time frame structure because from prior videos, we've had a little bit of price action developing here, and some things have changed structurally that I want to go ahead and address. So let's go ahead now to the current XRP chart and we'll take it from there. All right, guys, so this is the current XRP chart, and you'll recall from prior videos that I do believe that we have started a very clean impulsive move off of the lows here at 49 cents, which means we should not see 49 cents again this cycle, which means that we should see, in my opinion, double digits before we get even close to 49 cents. But we were looking at the lower time frame structure earlier, and prior to this, I had the lower time frame structure labeled as something like this. So I had us having completed our first leg to the upside, our first 5-wave move. I then had this correction as a subwave 2, and then I had this new 5-wave move, which on the lower time frames looks very, very clean. You can see it here. I had this 5-wave move 1, 2, 3, 4, 5 as the start of the next leg to the upside. But at this point, guys, this current correction has gone on for so long relative to the prior corrections. A relatively sideways correction, kind of like Bitcoin, is relatively sideways, but it's taken a lot of time which means that I probably want to relabel this because I think that this makes more sense as this type of a structure here, meaning we've completed our first major wave to the upside. This is a major wave 2 instead of a subwave 2, and we're getting ready for the major wave 3. And the reason that I say this is because in Elliott wave, market structure is visible on different time frames, meaning you can have a lower time frame uptrend or you can have a higher time frame uptrend, and we call different levels of these uptrends on time frames different degrees of uptrends. And for every different degree, you have different levels of invalidation on every degree, et cetera, et cetera. Now, this makes a difference because when you're talking about a higher degree impulse, again, like on Bitcoin from the move from 58K, the correction that follows is technically allowed to go down to up to 90% of that level. Meaning, if this was our significant low, then on the highest of high time frames, we're technically allowed to go down anywhere above that low and still print a higher low and not invalidate higher time frame structure. Now, in the lower time frames, you can take this lower time frame 5-wave move or a lower time frame series of higher highs and higher lows, and this becomes a significant level on the lower time frames. So here you have a higher time frame area of invalidation, and here you have a lower time frame area of invalidation. And it's important to be able to identify and distinguish between these different levels of invalidation and what they mean on different time frames if you are an active trader. And this is where most people get lost or get very confused because they see a move from $3.40 and they see a drop down to, in this case, $1.80, and they lose their minds. They think we've had a 50% drop. How can this be bullish? And that's where understanding these levels of invalidation becomes so significant. If you've had a move starting off of 128, an uptrending move that took us all the way to 297, then anything above this is still technically a higher low structurally. In that same idea, if you have a higher time frame move that started off of 49 cents, any move above that is still fair game structurally. And so again, this is where understanding these important levels and how they relate is very, very significant. With all that being said, when you have an uptrend of varying degrees, the way that you make sense of what degree we're in is by looking at the time that elapses within the corrections. You'll notice that within this impulse, the corrections are relative in terms of time and price to the prior lower time frame subwaves. So you have a small move up here, a small correction, a small move up here, a small correction, a small move up here, a small correction. Now this small correction became a big correction. That tells us that this move that we're correcting now is not of the same degree as this move up, right? It's a bigger correction, which means it's likely correcting the entire move up from 49 cents. And that's where we get the idea of a larger degree correction. That's where we get the idea of this being a higher low that can technically go below this low here at 130 and push even lower because it's correcting the entire move up off 49 cents, not just this little leg up here, which, as I said, I think now correctly should be labeled as the final fifth wave in a larger 5-wave structure here, right? We'll go ahead and change the degree here. That's where these things matter. Okay, up until this correction began, when it wasn't so big, I thought maybe we were looking at something like this, okay? And that we were going to see a move up and then a small consolidation and another move up to continue what would have been the third leg. But now that this structure has gone sideways for so long, we can now reevaluate and say, okay, it's likely that this was more likely just mislabeled, and this is a larger 5-wave move to the upside complete, and we're seeing a larger wave 2 now, okay? This is, again, just to talk about structure and why it matters in terms of identifying impulsive price action where we are in the cycle, okay? Now, we'll talk about lower time frames here in a second again, but as I shared here, this is an ideal scenario, a perfect place to long if we get it, clear levels of invalidation, and beautiful, beautiful structure if we get it. Now, there's an alternate, of course, that's that we don't get this low. And of course, XRP has been very bullish. And so there's a chance that we are not going to get these lows because of how impulsive XRP price action has been since the lows off of 48 cents. There's almost no coin in the space that has such clear impulsive price action. And I can go down the lower time frames and show you guys that it's very obvious to see that we have a lot of momentum behind this move. The price action is very clear. We have very clear subways, 1, 2, 3, 4, 5, correction, 1, 2. This one's a little bit messy, which is where we got a little bit lost here, but 1, 2, 3, 4, 5. And then this, I think this awkward looking wave 4 that we have, what I believe it is, it's just a, what we like to call a running flat correction, but basically a situation where we get a corrective structure that actually moves upwards, which is common in very bullish scenarios or circumstances, right? And then we have, again, the very clear 1, 2, 3, 4, 5. So with XRP here, because of how bullish it is and because it's the only real coin that has been showing very clean and clear impulsive price action, aside from maybe Bitcoin, there's a chance that we don't get these lows here. And so in that case, I could see something like this happening, right? Where we actually form a base or a range kind of in midair here, and we form our little triple tap higher low here. And you can actually look and see that this would actually make a very nice triangular structure. You can call it any number of different things. The ultimate outcome would be the same, which would be a tightening constriction until we impulse out in midair at around the mid $2 level. But again, guys, this is the alternate where we don't go and clear these lows and we actually form a base a little bit higher up. And I think that's just as viable as us coming down for these lows as well. Obviously, if we come down for these lows, we'd have a beautiful long opportunity into this cluster of demand. But even if we don't, depending on context, we may see a nice long opportunity if we form a clear base here kind of in midair. So that's XRP for you guys. Let's now go ahead and take a look at HBAR. And I haven't had much to say on this one for the last few weeks because there hasn't been much to update on it. And I've had people constantly tagging me and asking me to make updates on it, but there's nothing to update. So previously I said that, obviously there's one level that we're looking at here, mainly on both the USD and the Bitcoin pairings, and that's this monthly flip to supply level. You can see we closed the monthly above it, so now it's technically acting as support. And I talked about in my last video update how this is great to see. The problem really with HBAR was that the Bitcoin pairing doesn't look as great. And that's because on the Bitcoin pairing, we are actually rejecting against that same monthly supply zone, which is visible here. It's also the midpoint of this much larger macro range on HBAR, similar to the macro range that we have on CRV. And so once again, just like CRV probably a step or two ahead, I pointed out in that same video that I last made when I talked about HBAR that we could certainly see a revisit to the range lows where we'd have essentially the optimal place to consider a long on HBAR. Because if the Bitcoin pairing bleeds down to this region here, that means that this could be again setting up for a triple tap, and then we're looking for a move to the range highs. Now, what this means, though, on the other hand, is that if we can't get above this red zone here, then HBAR against USD likely underperforms against Bitcoin until we reach this level here, which is 60% lower. Okay, now this doesn't necessarily mean that HBAR will bleed against the US dollar pairing, because again, if Bitcoin is pumping, then Bitcoin could technically pump 40 to 50% and HBAR could kind of consolidate here. And that would be enough to send HBAR Bitcoin down to that area of interest that we had. So this isn't to say that I'm necessarily bearish on the USD pairing. I just think it's not quite ready for that aggressive expansion that we're looking for. So again, you can see these levels are respected so well on these charts. This is why we use TA, because we can spot ideal levels to enter. For example, you could have had bids resting here at 19 cents on HBAR and you would have gotten filled and you'd be up some 25-30% already. But the point is that HBAR could technically, like, you look at this aggressive expansion again, we could technically just come down. Let's go to the higher time frames here and see if we can identify like an area of interest. So this is the 4 monthly chart. And again, all I'm doing here, guys, I'm going to different time frames to see where price spent the most time, right, within larger structures. And you can visibly see that easier when you change the time frames to higher time frames. You can see within this giant high time frame structure, price spent, in this case 12 months in this region down here. Really, this entire region, this entire cluster, the apex of this consolidation is a massive area of demand. You can see different areas on different time frames, but for example, I would view this as, if you can buy HBAR at 12 cents and below, an incredible buy at this stage, because you have what is essentially like a multi-year tightening consolidation, and then you have a massive monthly candle that expanded out of this consolidation, right? And so any retraces back to the apex or the point of control or whatever you want to call it within this consolidation is then a buy. So you can view that as anything at 12 cents. But again, we don't know how deep this is going to retrace. And so a better gauge of when it might be a good time to buy HBAR against the US dollar would be to look at the Bitcoin pairing. You can also see that, this is our larger time frame zone, but we also have like a lower time frame cluster right here before this expansion. We almost tagged that, right? So you can set bids at 18 cents and below into the orange zone to try and catch any more dips that we may have on HBAR. But again, we don't know how deep this is going to go because partially it depends on how deep Bitcoin pulls back. What a better gauge, I think, is by looking at the HBAR Bitcoin pairing. Whatever price HBAR is at, if and when we get to this green zone, that's a buy. That's kind of the way that I'd approach this, right? Because there's a decent chance that when HBAR Bitcoin hits this area here, we're at the point of kind of like maximum risk to reward on HBAR longs when we enter this green zone, if we do, right? There's a chance that we don't get this low. Maybe we only stop at this cluster of consolidation. But again, with the expectation that Bitcoin may be going parabolic soon, it makes sense to see a bleed on altcoin Bitcoin pairings that are not yet ready for those moves as they consolidate to ultimately follow Bitcoin. But that consolidation on their USD pairings while Bitcoin is pumping could lead to these types of bleeds. And this is where we look for those max risk reward opportunities on altcoins. So if we get this, it's a screaming buy wherever HBAR is against the dollar if we manage to get to the zone. And so this is exactly kind of like the same update I talked about in my last YouTube video on HBAR. There really has not been any change to that. There's been nothing to update because we haven't been able to clear the Bitcoin pairing resistance. And until we manage to clear that, expect HBAR to kind of consolidate or maybe bleed a little bit until we're ready. So that's all there is for HBAR, guys. I was planning on maybe adding some more altcoins at the end of this video, but this video I think in and of itself is quite long now. So we're going to go ahead and end it here, guys. If you did enjoy this, please like, share, and subscribe, and I'll catch you guys in the next one.